China's Evergrande because the slow motion collapse of the world's most indebted property developer has just entered a new stage. The embattled company has filed for bankruptcy protection in the US while its restructuring plans are being carried out elsewhere. Meanwhile, signs of trouble are spreading across China's broader property market, with large housing units remaining unfinished, and buyers who pay deposits skipping payments as a result. Another major developer, Country Garden, has warned that it may not be able to make interest payments on its bonds as it struggles to find the cash to finish projects around the country. Well, joining me now is our Asia business reporter, Katie Silver. Katie, bring us up to date with the latest on what's happening with Evergrande. Hi Tag. So as you mentioned, they're filed for bankruptcy protection in the US. They've done this under Chapter 15, which governs foreign companies in the US that are undergoing restructurings, basically for protecting them from any creditors that may want to sue them. You've probably heard of Chapter 11 that, for protecting them from any creditor, typically governs American companies, but as I say, this Chapter 15 for foreign companies now, according to court filings. They say these negotiations are ongoing in Hong Kong, the Cayman Islands, as well as the British Virgin Islands. We've reached out to Evergrande, but so far not yet heard back for confirmation. All this but a reminder for those who think, actually, I've probably heard of Evergrande before. It is, of course, China's huge property giant. We were talking about it a lot a couple of years ago. They have about 1,300 different projects, cost 280 different cities in China, and they invest in everything, not just property. They also have, for example, an electric vehicle maker as well as a football club. But as I mentioned, 2021 was when we saw the company default on its debts, sending shockwaves across the global financial system and, in fact, triggering a string of defaults across other builders who were either owed money from Evergrande or expecting Evergrande to complete some contracts of them. Since 2021, we've seen about 40%, or the companies that make up about 40% of China's housing sector, defaults, and currently, as we understand it, Evergrande has about $300 billion in debt. It's lost about $80 billion in the last 2 years, and in fact has even been in a trading halt its shares since last year. Yeah, indeed. And as we've been seeing the property market very much in the focus in China right now, we saw house prices earlier this week dip for the first time as since the ending of pandemic restrictions. Worth stressing though, Evergrande is a different company to the other one that's been in the headlines a lot in recent weeks and months. That's Country Garden. Can you bring us up to speed on what's happening with that company? Sure. So they say, for example, that the losses of if Country Garden was to go under, that would be far greater than Evergrande. It's a much larger company. It, of course, warned in the last couple of weeks that it was going to make about an $8 billion loss in the first half of this year. And for any of us who remember the trials and tribulations of Evergrande, you could almost have a little bit of PTSD. They also told bondholders that they were not going to be able to service the boundary payments. This was, of course, the start of Evergrande's troubles. We have seen its shares up today about 3%, but they've lost almost half their value in their past month. And the issue here is those unfinished projects that you mentioned, basically people buying properties off the plan, seeing construction falter, and then buyers therefore stopping paying their mortgages, and that court further causing financial stresses for these developer countries. And it must be said as well that these developers in the property sector makes up about a third of China's economy, so it's a really pivotal sector, creating fears of contagion and what these potential collapses and defaults may mean for the rest of the economy. And of course, China's economy is really struggling at the moment. We've talked about the fact that it has hit deflation. Price is going down rather than up. Super unusual considering the rest of the global economy. We've talked about the fact that growth is down, trade is down, and indeed the central bank. They're having to cut interest rates. Earlier this week, most unexpected, is the world's second largest economy struggling really to get back after the pandemic tag. Okay, Katie Silver in Singapore, thank you very much. We have of course been watching developments coming out of China all this week. Lots of disappointing economic data, not least the fact that they decided to stop reporting youth unemployment after it had reached a record high in June of this year. Let's talk about the market implications now. Mike Cooper's Morningstar Investments, a chief investment officer for the EMEA region, and joins me now. Mike, thanks for being with us. In morning, Jack, what's going to the minds of the people that you work alongside, that you work with, when they see this kind of slow-moving car crash happening in China? Yeah, it's as you were covering up early this morning. It is something that's been going on for so long now that people might be thinking, is this still happening? But what's interesting about the way the story is evolving is just the scale of it and how the Chinese government have chosen to deal with the issue now. You might recall previously, the Chinese government got much tougher on developers a few years ago, the 3 red lines, and this is really a response to excessive use of debt. They then wanted to crack down on that, and of course we also saw the crackdown on the technology and education companies. But now the pendulums swing back the other way. So here the issue is how to read the way the government is dealing with this. We all know the script of how this works. Property over lending and developing has been going on everywhere for centuries. The issue really is how the government allows this to play out, whether it's a more American style crunch or whether it's a more Japanese style long play out. And here we've got further evidence of a heavily intervened, a longer, slower play out. Yeah, I mean, talk us through what you see happening in the months and perhaps even years ahead. I mean, some of those measures you talked about already, limiting the ability of these developers to borrow. Some of it seems to have come quite late in the game. So what's happened in the last 18 months? Of course, globally is the huge rise in interest rates. So this is a race against time if you're heavily indebted, and particularly if you're heavily indebted in a period of economic weakness when asset prices start to fall. So this is, I think, one of the reasons why the government's attitude to dealing with the crisis has changed. The wider fallout, the non-implication to the financial sector, the economy, in terms of asset prices and people's wealth, means that it's imperative to prevent this escalating, and so a longer, slower workout, as I say, with possibly a more Japanese style rather than a US style treatment of this suggested, and go on for quite some time, and there'll be heavy intervention all along the way. Okay, Mike Coop for Morningstar Investment Management, thank you very much for that.